If you can anticipate something happening, giving knowledge about what should or could happen, you have a better chance of seeing and benefiting from the future. Athletes do this all the time. They anticipate the future. In fact, the very best have the uncanny ability to be at the right place at the right time from their anticipation of what should happen. Think of soccer greats like Messi. He not only has great skill, but also can in real time view the pitch, the opponents and teammates, and just be at the right place at the right time.
Yes, it's the hub of so much for Barcelona, but here's Messi. And Suarez hits the bar, and Messi follows up, and it is 2-0. They've picked Liverpool's pockets with a counter-attack, certainly against the run of play. And that's why the celebrations are so joyous.
Golfers anticipate all sorts of conditions as well, including the lie of the ball, the undulations in the green, the speed of the greens, wind effect, rain effect, as demonstrated by this shot from Shane Lowry, the 2019 Open champion.
It's just magnificent. This is just extraordinary. Something's going to wake me up any minute.
Successful traders need to anticipate as well. If you are constantly reacting as opposed to anticipating and then reacting, you tend to be a chaser in the market rather than a leader or an anticipator of the market. For example, in a post I wrote today, I anticipated in the sterling versus US dollar from a visual survey of the chart's price action and technical levels. I wrote about the price moving back above the 100-hour moving average, the blue line right here. If the 100-hour moving average can now hold support, we could see a wander back higher toward the 124.80 level, the 124.90 level, which is the broken 38.2% retracement, and the 200 moving average at 124.97 too. Those are targets on the upside if the sellers start to cover. And that is exactly what happened. The 100-hour moving average held, the price wandered above the 124.80 level and initially stalled at the 124.90 level. The correction came down, stalled at the 100-hour moving average, the blue line right here, before wandering back to the upside and to the 200-hour moving average at the 124.97 level. Score! Like Shane Lowry or Messi, I examined the conditions, I anticipated what might happen, and it happened. Now, it does not happen all the time, but anticipating is part of success of an athlete and a trader. There is another part of the trading landscape that allows me to anticipate the future. It stems from the idea that non-trending transitions to trending. That is what I'll focus on in the rest of this video. The euro versus US dollar became the single currency of the European Monetary Union on January 1st, 2002. Over the last 17 plus years, the calendar low to high trading ranges has been as high as 3,708 pips in 2008 and as low as 1,147 pips in 2013. The average over those 17 years is 1,966 pips for the year. With the 18th year now into the month 7 and past the midpoint of the year, the low price is down at 111.06 and the high price is up at 115.69. That is a low to high trading range of only 463 pips. That represents only 40% of the lowest of the trading ranges over the last 17 years of 1,147 pips. Needless to say, the range this year is very, very low. Admittedly, the volatility over the last 7 years is down. Nevertheless, even over that time period, the average range is 1,498 pips. Over the last 3 calendar years, it is 1,451 pips, not much different from the 7-year average. At 463 pips, there is room to roam. When you're in such a narrow, non-trending range, I believe it is always prudent to start to think in terms of how is this going to play out. In other words, if we have room to roam, do we extend higher, do we extend lower, or do we just die here and resign ourselves to the idea that the trend is dead? Personally, I throw out the last thought. Why? Trends are where the most money is made. It's also where the most money is lost. But there are traders out there that can trend the market. They are big, they can bully the market, and they get tired of the 50 pip ranges. In contrast, there are traders out there that feed the trend by being constantly wrong during the trend. The combination of those two helps to move the market, helps to trend the market. When a historic record-breaking low range is in play, it is exciting to think in terms of anticipating the trading potential of that anomaly. Ironically, tons of traders will easily and happily say the market is overbought or oversold. However, there are very few traders who have the mindset to anticipate that the markets are underbought or undersold or due for a trend. Think about that idea. So one of my favorite truisms in trading is this: non-trends transition to trends and trends transition to non-trends. 2019 so far is non-trending for the euro versus US dollar. It is underbought and undersold at the same time. We are due to trend. To give you a visual, the chart here is a weekly chart of the euro versus US dollar. In 2019, I put a box around the range for the year with the time it took to create that range. I then copied the box and put it at the start of each earlier calendar year, starting in 2014. It is not a huge sample, although it is representative of the history. What you can see is that for most of the years, it did not take long to exit out of the box. What is interesting, however, is that in 2014, the range for the first half of the year was very similar to the range we are seeing in 2019. In fact, it was only 515 pips. I can imagine the same grumblings about what a non-volatile year it is and that it will never move out of this range. However, when the lower extreme was taken out, the price ran and ran and ran. In fact, in 2014, the range reached 1,896 pips. That was the largest range since 2011. That was an extension also of 1,380 pips. Non-trends transition to trends. So what helps non-trends transition to trends? Well, the dynamics of non-trend to trend is often a function of two catalysts. One is the large trend traders and how those large traders can push the price. The second are the trend fighters who feed the squeezes. They are typically retail traders who lose a lot of money in trend moves and fight them most of the way. The large trend traders who can move the market have the firepower to start a trend, hop on a trend, add to the trend by adding on corrections, and keep the trend going. Those trend traders may get involved because of a catalyst from a fundamental story. However, they may also just start it because they need movement. It's hard to make a lot of money in a 400 pip trading range. The antithesis to the large trend traders are the other traders, generally retail traders, who fuel the trend by first getting sucked into the idea that the price is never going anywhere. They don't see underbought or undersold conditions. As a result, when the price does break, say to the downside, those traders may hop on the break at the start. They do tend to win at first, but then they fail to anticipate how far the market trend can go. So there is a break lower and they buy a dip and they stop themselves out. They buy another dip and then they get stopped out again. They buy another dip and they get stopped out. They fight the trend all the way down by trying to buy dips only to get stopped out. The real losers in this group are those that buy and buy and buy and average in. At some point, those traders capitulate or get liquidated by their broker, and that ends up forming the bottom usually. Clearly, the winners are those that anticipate the impossible possibly happening. They recognize the power of non-trend and what it potentially means for the future, and they attack the currency trend because of the non-trend. The important mindset to have is non-trend transitions to trend. and it is wise to anticipate something happening, even if it does not happen after all. Think about it. If the trend does not happen, we all suffer together. The game sort of ends in a 0-0 draw. It is important to have the mindset that this may be the big one, and we need to trade it with the thought in our minds that it is indeed that. For example, if we extend the euro versus US dollar range from 463 now and it goes to 750 pips, or 1/2 of what is normal, there is that profit potential that would make your year not so bad. Now, if the range reaches 1147 pips, which is the lowest range on record, that is an extension of 684 pips. That would be even a better year. If the range reaches 1450 pips, which is the average over the last 3 and 7 years, that is a trend extension of nearly 1,000 pips. If you catch that move, or most of it, you had a great year. So which way do we break? Well, the fact is, I don't know yet. When the market non-trends, what is it saying? To me, the market or the collection of traders in the world are saying, I don't know which way the market's going to go. That's why we're in a 463 pip trading range for 6+ months. As a result, why should I put my ego of what I think ahead of the collective wisdom of the market? Sure, I can say or hypothesize that it will be the easing Fed that will shift the market sentiment for a sharply lower dollar. Or I could also say that the dollar is king. The U.S. economy is the strongest, and therefore the dollar will trend higher. I don't know yet. I don't know how that story or other stories are going to play out, and the market doesn't either. But at some point, like we saw in 2014, the price action will tell the story, and it will shape the story of the trend extension. What I want to warn you, though, is keep your ego about what you think in check. The market does not know. Why should you be so sure? So, it is time to think about a big move in the euro versus US dollar. You need to anticipate and think about a move to catch and stay on a move. You also need to anticipate and think about a move to avoid trading against that move and feeding the trend trading winners with your losses. But what I know is 463 pips just does not make it for me in 2019. I'm just not going to believe it. How about you? Do you believe a trend is on the horizon? If so, prepare for it. If you like this video, please give a thumbs up. If you did not like it, give it a thumbs down. Also, please subscribe to our station and put a comment. We would love to hear your thoughts. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.